so you don't have to worry about resharing anything. Okay, what's going on, everybody? Welcome back to Wolf. It's good to see you all here. Happy Wednesday. Man, we got war happening. We have Trump coming out here, psyching out the whole market multiple times in 1 week. We've got Bitcoin running up, going against the market in many ways. We have S&P down currently 0.5%. VIX is down 1%. Bitcoin's up 1.5%, holding $70,000. We have Tom Lee coming out saying oil prices being high is good for the stock markets. We have Dennis Porter and many other people in this banking conversation around crypto and this crypto market structure bill, the Clarity Act. We have people talking about it right now. We have bankers saying they're not a fan of it. We have Dennis Porter coming in and saying that the bankers are lobbying heavily against it. A lot of stuff on that front. We've got Bitcoin, the remaining Bitcoin now, less than 1 million left in history to be mined. And so some interesting stories I kind of came across this week. I'm joined, as always, by Mr. Thomas on this show. What's going on, Thomas?
Doing good, man. Yeah, it's quite a summary there. Lots going on. Kind of wondered if we need to become geopolitical war experts this week to try and figure out what is going. I've got friends turning bearish on their stock investments, and they're telling me about the Strait of Hormuz, and I'm oh no. Like, I mean, there's a lot going on. Well, Tom Lee, he's the champion of this. He's the king of this, and of course he, as you alluded to, wants to inform the public that actually higher oil prices are good for stocks. So I guess if we can get the Iranians to close the strait,
of course,
pump up the oil price, this is somehow bullish for us all. I can't wait to. I actually haven't seen this video. I can't wait to see.
Yeah, let's give this a watch. It's a quick little 1 minute clip. Let me double check that. Let me actually make sure that you guys can hear the audio sharing tab. Okay, here we go.
I can't wait for this.
Here we go. So Tom Lee saying high oil prices are good for the U.S. stock market.
It's a very confusing time. I think it's very difficult if someone's trying to trade both the headlines or trade oil. But if I look back at the last 2 days, oil's $15 higher than it was last week, but the S&P's higher. So to me, the market actually is handling higher oil prices better. And, we wrote in our note this morning that we think higher oil prices are actually good for the U.S. stock market.
Yeah, see, I think that's going to be a really hard sell for people who are watching this program, like trying almost too hard to paint some bullish scenario. How in the world are higher oil prices, which then mean even higher gas prices, which mean higher jet fuel prices, and all sorts of other issues that are related to that, input costs on a whole number of other industries? How is that possibly good for the stock market?
Yeah, part of it's a relative. One, U.S. is an exporter of oil, so we net benefit as an economy from higher oil. The second is other countries are importers, so the U.S. not only looks better, but on a relative growth basis, it should outperform, which means flows back into the U.S.
I love that the co-host there is like, listen, Tom, I'm so used to all of your just absolute bullish garbage.
Oh yeah.
But I can't even allow you to, I can't let you go in there. I got to stop you right there. How is it? And notice that his first reaction is like, yeah, and then he pauses for 5 seconds, and also it's nonsensical. So this point that US is an exporter of oil, well, okay, but guess what? You still, like, that's got nothing to do with the fact that the economy, that just means they sell more oil than they buy from other countries. What about the fact that they use the oil inside the economy, as he brought up? It's obviously a key input into petrol prices, into basically every input of almost every major industry. And hilariously, software stocks, which you might think, well, that's one industry in which it won't be affected by oil because, you don't need oil to do your, Microsoft Teams or whatever. But the funny thing is that they're going to be smashed too if oil is sustainably higher, because it's going to be big input into the economy. It's going to raise inflation. it's going to make it that much harder to cut interest rates. And so we're going to have that flow through to all these other industries that even aren't directly influenced by the oil price. So it's hilarious. But asking Tom Lee, I mean, we should have asked Saylor why higher oil prices would be bullish for Bitcoin. That we might have got it's like, yeah, I mean, it's silly at this point, but it is. I think to be fair to Tom Lee, maybe you could say, we don't know what the hell is going on. We don't know how long the Strait of Hormuz is going to be closed for. We don't know how long the oil prices are going to be elevated for. And maybe it won't be bad. I mean, like, if Tom Lee went on television and was like, hey, guys, nothing ever happens. Every time there's macro doom and gloom, guess what? It all kind of works out and stocks go higher. That's how this works. Be like, maybe. But
it's got products he's trying to sell. It's almost like you're trapped in this hole of like, you must be a perma bull. There must be a bullish take you can spin on. That's why they like having him on too. Like, he was also, I believe this clip as well was at his event. So I think he like extra had to show up type of thing. He's like at the event, probably investors are there and stuff like that. We had a couple guys in the Wolf team who were at that event. So I believe that's what it was. And that's not even the wildest video. Like, dude, there's a couple. Let me play this other one here, because like I don't have too much to add there, honestly, with Tom's video. I don't know how much I can add to that, to be completely honest. But this is an interesting one, because this is related to something that's been kind of all over the timeline in regards to crypto, just in general. All sorts of talk around the Clarity Act, crypto and the crypto market structure bill. And I guess there was a big American Bankers Association conference thing. And they were just talking about crypto and a couple of their panels, and I guess their perspective towards it. There's another clip I'm going to play here in a minute as well with Dennis Porter, who's big in like the Washington, D.C. area, trying to lobby for Bitcoin kind of thing. And so he's deeply involved and entrenched in all this is going on. And so this was an interesting clip, because he mentioned that the bankers are not a big fan. They're lobbying against it pretty aggressively, because, they don't get to really take a piece of it if crypto ends up going through. It's kind of like people saying, XRP is going to take over the world, except why would anyone want them to? There's no incentive to let that happen other than the holders wanting it to happen. So anyways, here's one of the ladies in the banker side of things just talking about how this crypto clarity thing, this is a quote from the video. I know holding payment stablecoin and creating liquidity in that DeFi world, it's all part of the crypto roadmap, but that's not cool. That's not okay. So what she says. So here's the clip.
I just would add the ideas and the risks I think we're focused on around holding payment stablecoin are actually quite tied to the DeFi world also. And we don't have, and it's not the right forum to go into decentralized finance and kind of everything that entails. But holding payment stablecoin, creating liquidity in that DeFi world, like that's part of the crypto roadmap. But that's not okay. I just would add the ideas and the risks I think we're focused on.
So yeah, not a big fan of these things, I guess.
Okay. Let me steelman her argument for you, and I'll give you the best interpretation of what she's saying. I haven't seen the full context of the video. However, consider this. If you put your money in a bank account, your Chase Morgan account or whatever, you are relying on that money to be there when you need it, like an at-call deposit. The idea is, of course, the bank isn't doing any kind of fugazi with your money, right? If they're going to hold it, and yes, that they are taking risks with your money. They're lending it out to borrowers, people that want to buy a house and this sort of thing. But you at least believe that they are operating on a set of rules and a set of regulations, that you have some comfort that they're managing the liquidity of your money and they're not going to lose all your money, or at least you have a belief that when you go back to your bank account to withdraw that money, it's going to be there.
Yeah.
Now, if you then put that money in and the bank goes, oh yeah, I'm going to YOLO it into, Sam Bankman-Fried's 20% ARR DeFi coin thing, and I'm going to mine, Monkey Coin, and I'm going to do all this kind of stuff at the same time, and I'm going to be yield farming on my like whatever, just any kind of stupid stuff you're doing, and maybe it blows up. Maybe I think she's saying it doesn't really fit in terms of the risk appetite of their customers, which I don't think is a completely outrageous statement. I mean,
it's true.
If
I'm
I
not
want
even sure who she's speaking to either in the audience. It was just a clip that was kind of circulating all over the timeline. I got to double check and see who her audience was in that, because it may not make sense. It might have just been literally like, hey, for the context of this conversation, like this take maybe is way more level-headed than maybe it kind of went all over Twitter, because we're on Bitcoin Twitter.
I mean, the thing is, I guess, is like I think I'm a free markets guy, and I want to see everything available. Like, I love the idea of having, in 21 when it was like, oh, there is like money to be made in terms of these DeFi pools, and you can get, if you want to get if you want to be sitting on the cutting edge and you want to be borrowing money here and arbitraging it here and putting it into these crypto pools, like that's cool as, but I also, if my parents say to me, hey, I've got some money and I want to save it, I want to be able to say to them, well, why don't you put it in this term deposit, and it's going to be safe for the next 6 months, and you'll get it at the end, and you'll get, your 2%. And so it's not the worst thing to have like differentiation across the risk spectrum. And I think this idea that, hey, we don't necessarily want to be muddling these worlds, maybe not the worst thing. I don't know. It's tough because you do see these clips taken out of context, and people get mad about it on Twitter or X or whatever. And it's like, well, maybe it's reasonable.
It might be. And honestly, to help contextualize this a little bit, it's probably not a coincidence these were kind of circulating around the same time. Dennis Porter going on. I guess it became topic of conversation because all those clips were circulating around how the bankers are, I guess, reacting to all this stuff around the Crypto Clarity Act. I guess it's getting passed, or it's moving forward in progress recently. And so I guess that's why those clips start to resurface. But here's Dennis Porter talking about sort of the situation in DC right now.
By the Trump administration, and they just cram it through. And then in that dynamic, you have the banks lobbying very aggressively against the bill, which is not something you want to see, because you might not just lose. The vote is already tight in the Senate, very tight. So if you want to make sure the bill passes, you don't necessarily want the bank lobbying against this bill aggressively. The bank lobby has come out and said that they do plan to spend to counteract the crypto industry. They said they're raising 9 figures, which is right up there with the fair shake number. So that does create that counterbalance where they can essentially assert themselves into the ecosystem and start to peel some of these lawmakers off. And you have to keep in mind too, when you're talking about the lobbying effort, one of the advantages that a lot of these bank lobbyists have, or you would say, the American Bankers Association, all these different groups that support the interests of the banks, is they have a lot of local branches. They have a lot of local jobs. They have a lot of local economic incentive for these lawmakers to want to be on their side versus being on the crypto side. And also, crypto really is not popular right now. I wouldn't say we're in a bad bear market and a sort of difficult bear market, but public trust in the crypto space is at an all-time low, something that we're deeply concerned about at Satoshi Action, something that definitely needs some work as we move forward as an industry. We need to regain public trust.
It's interesting because I think this past cycle with ETFs getting in, there was a lot of speculation that maybe the days of volatile Bitcoin were over, the days of 50, 60, 70% drawdowns were over. Here we are, 50% down, and potentially
50% down. Not at 70 yet, but
yeah,
but
that's true.
I take your point, and I gotta tell you what, my ears pricked up when I listened to that clip. You said they're raising 9 figures for lobbying, like
yeah.
100. That's hundreds of millions of dollars for like that. Like, Kate, I think we might be in the wrong industry, right? I think we might need to get into the lawmaking industry because where is that 9-figure spend going? Who is on the end of that 9-figure spend? You know, that was the first thing that is so much money for quote unquote lobbying. What does that mean? What does, you know, that's a lot of expensive champagne dinners if it's 9 figures.
That might have been just an arbitrary number. I don't know if that was like a true number. 9 figures is a lot of money.
Yeah, and to his point about the quote unquote industry being at a loss of trust, reputation, well earned, I would argue, from the perspective, and I'm talking about the crypto industry. You know, I think Bitcoin is Bitcoin, and I don't think Bitcoin's done anything bad. Bitcoin has gone up and gone down a bit, and it's volatile, and that's what Bitcoin does. However, when you have the quote unquote crypto president, you know, that's the way he's framed himself as Trump, and he's released these, you know, well publicized famous rug pulls. And like what was Trump coin and even more disgusting Melania coin? Instant rug pulls. Like literally instant rug pull. Like, how is that going to be anything?
That was bad.
But destroying the credibility and trust of the quote unquote crypto industry. And I think it's fair to say, when you look at the crypto industry, there's Bitcoin and Bitcoin related products, which it's built an ecosystem, and to be fair, a lot of treasury companies have certainly managed to wreck their investors. I think that's fair to say. If you look at what's happened in the last year, although strategy has had a good 5 years, you know, on the whole. But outside of that, when you look at crypto, you go, okay, there's a demand and there's a market for stable coins. Some people, you know, that's finding its use case. Everywhere else, there's nothing in crypto that's actually really delivering for people. And even the stable coins, when you think about it, that's not for US citizens, right? Like, I mean, not real. I mean, yes, in the sense of if you're online and you're using, you know, your crypto portfolio for like, you know, you're a heavy crypto investor and you're just moving in and out of your other crypto assets and you're just like temporarily storing your money in stable coins. But fundamentally, the actual use case of stable coins that is like shown exciting demand is, oh, okay, this is a way to get US dollar infrastructure to Argentinians or other people in other parts of the world that go, hey, I actually prefer a stable coin versus, you know, US dollar stable coin versus my local national currency. But the point is that everyone in America is like, hey, I've already got a bank account. Like, what's that doing for me? Yeah. So I think the quote unquote success or failure of the crypto industry rests on the success or failure of Bitcoin. And I think that Bitcoin, you know, is still very much in position to like be fabulously successful in terms of being a savings account for a high proportion of Americans. If you look at its long track record, it's been amazing. If you look at its past 5 years, which is pretty long as well, to be fair, it hasn't been very good. Not disastrous, but I think also we have to remember that the COVID times were just so insane for so many different ways. And it's not necessarily even like Bitcoin's fault that happened. You had a massive bubble in all assets because of all the money printing that happened in COVID. And it made stupid prices across the board. Yes, stupid prices in Bitcoin, but stupid prices in everything. And, you know, we saw digital images selling for $60 million, right? Wow. So we just an insane period of time. It's still taking a period of time to normalize. I would bet you the next 5 years for Bitcoin so far and away outperformed the last 5 years, just because the last 5 years is coming off this COVID base, and it was just messed everything up. You know, that's certainly what I think is going to happen. But I also think that like the quote unquote success or failure of, you know, the trust of quote unquote crypto is like, well, yeah, how well has Bitcoin gone? And right now, people aren't all that excited about it because the price is not, you know, 70K Bitcoin is okay. You know, if you bought Bitcoin over the last 3 years, you know, if it was 3 years ago, 2 years ago, you're like, yeah, whatever. If you bought Bitcoin a year ago, you're not thrilled about it.
Yeah.
But also, you know, these things will be determined based on a long period of time. You know, we'll be, and it gets to this other point that I know you wanted to bring up, which is like zooming out here. We got there's now less than 1 million Bitcoin left to be mined. So we're at there's 21 million Bitcoin. 20 million have been mined. There's now 1 million to go. It's going to take another basically 100 years for the next million Bitcoin. Like, it's a long, you know, like, what's interesting about Bitcoin is the fact that we'll be talking about it in 30 years time and in 50 years time. And I think that's why it's so easy to be very bullish on Bitcoin, because it's not, you know, the network is so strong. It's not going anywhere. And it's like, in a world where Bitcoin just is 21 million Bitcoin that will ever be, you have to think the prices in the future will be higher than the prices today, because the economy is going to be stronger. The Lindy effect of Bitcoin makes it, you know, normalized over time. So while Bitcoin is still kind of new and uncertain, in 30 years time, most of the world will have been born after Bitcoin came. Like, most of the world will be younger than Bitcoin. We haven't quite got that yet, but we're already at that point where, like, for Gen Z, Bitcoin is like, yeah, it's been there their whole life, right? And that's going to be the case for everybody in enough time. So the kind of the newness, uncertainty of it goes away. And as it ages, it just collects this sort of, well, it's not going anywhere. And that is the certainty that comes from that provides security. It's the same reason why gold has the advantage right now, because people buy gold because they're like, hey, 5,000 years history. And you can't fight that in a short period of time. But that argument starts to wash away the longer this goes. So in 30 years time, 20 years time, 10 years time, you have this go, okay, Bitcoin now has got, you know, 25 years history. This kind of stuff that happens. And I think that that will make a difference in the long run. Of course, as well, part of the issue is when you take, you know, over time, you just sort of fight these battles, these FUD battles, right? So 5 years ago, I don't know if you recall, Kay, but the big issue was how much energy the Bitcoin miners were using. It was a huge issue in the Bitcoin ecosystem. Bitcoin's being banned by China. Now it's like a laughable issue because Bitcoin mining is nothing. It's nothing compared to what AI is going to be, right?
Yeah, literally,
it's nothing. And so that was like the big FUD from 5 years ago. And that has been essentially defeated through time, because now nobody makes the case, nobody makes the argument. It's simply a non-issue. That's one piece of fear, uncertainty, and doubt that's been diminished. But we still have more to face. Bitcoin needs to go through and be battle tested through quantum computing breakthroughs.
Oh, dude, that's going to be an arc right there during that. When that saga comes, that's going to be a rough one.
Yeah, well, I would argue we might already be in that saga right now, in the sense of that's probably a significant piece of why the price is depressed relative to where it could be. You know,
the first time an account gets wrecked from that, it's going to be a freaking circus. Like the first time a big account gets somehow screwed, and it might not even be real. It could be a targeted attack in order to get people scared. Even maybe it's not even something to really be worried about, but it might just be someone who's like able to do it They're able to crack a big public one. Maybe it's even literally like the CIA or like an inside operation to sort of like screw people out of their positions, knowing that they're going to run scared, knowing that they're going to panic. They're going to move, like imagine like a whale. Because, like in those whale tracker wallets, it'll be like so-and-so moved X amount and everyone's like, oh my God, they sold. Another Bitcoin OG sold. But really they just moved money around. They weren't actually selling. I think it's good. We're going to have a couple of those cascades, dude. I could see some big, like people talk about those God candles, $10,000, $20,000 candles, dude. In that time, I could totally see us having some wild price action.
Look, I completely agree. That's a very plausible situation. Equally, there's a whole bunch of other things that could happen that might change things. I mean, we might have. Well, first of all, there might be technology that comes out that makes it clear that quantum isn't an issue, or in terms of like Bitcoin gets governance consensus and is able to do an upgrade to make it quantum safe, or maybe the community gets essentially clarity that actually quantum isn't really a threat, because it's all very theoretical, right? It's not like there's no quantum computing today that's cracking like the highest number. You can look this up. It's actually hilarious. The highest number that a quantum computer has ever factorized is 21. Like if I said that like nobody will believe me, but like go ask like ChatGPT, what's the highest number a quantum computer has ever factorized? Like it's stupid. You got 10. Your smart 10-year-old has done better than that. But the point is, it's all very theoretical, right? They've never actually accomplished anything, but in theory, they might in the future. But the point is that we might yet get consensus that this actually isn't an issue in the future. I don't know. Like it's really hard to tell. Of course, there's so many different things that could happen that we never would have predicted in the first place, right? So the point is that like there will be a Lindy effect with Bitcoin to get that sort of higher consensus trust over time. But I mean, look, it's interesting as well. Certainly the Clarity Act and all this stuff is like building. It's like normalizing it for industry, for government, all the kind of stuff that you would need to see in order for Bitcoin adoption, or to feel like a sense that Bitcoin adoption is spreading.
There's a really good clip here I want to play of Gary. We did a podcast with him a little while ago, and he was kind of talking about this sort of thing of like what it's going to take for Bitcoin. He has a very contrarian, I guess, I don't know how contrarian it really is, but you don't hear this type of perspective much on the spaces because it's like, I think it's just a nuanced conversation. I think it's honestly, people are just too lazy to talk about it in depth. He's definitely thought about this. He comes at it from a different angle. He comes from the business world, comes from oil and gas. So he looks at Bitcoin just very differently than a lot of the guys who got into Bitcoin at $500, for example. Like he definitely found out, he probably heard about it early, but he wasn't like full porting at $500. So he's got an interesting perspective. He's also loaded and has done very, 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 very well for himself. So anyway, there's a clip here, talking about where the crypto markets are, where Bitcoin is at, what it will take. He actually doesn't think we need a Bitcoin strategic reserve. He thinks it's a pipe dream. He even said, like that idea just isn't the move. And so I don't know. I'll play like a minute or two from here. I'd love to get some of your thoughts on this too, because we're kind of talking about what it's going to take for Bitcoin to come through. You mentioned something really interesting. It might just be time. It might just be time. Where you looking like, oh well, like everyone has gold. It's been around for forever. That's basically the reason anyone holds it. Like 99 times out of 10, you're not going to find anyone who can talk past that. So it's an interesting idea. So here's Gary.
We're in the first inning, man. We're in the first inning, and we do not need a strategic Bitcoin reserve. That is not my thesis for being super long Bitcoin. Yeah. I don't give a fuck about the SBR. The U.S. Strategic Bitcoin Reserve is a pipe dream. We don't need it. It's not going to happen. It will let you down. And it would be insane for the United States government to put Bitcoin into the strategic reserve, assuming that's the only thing. It'll be gold, silver, and who knows what, okay? But we'll be lucky to get into a piece of it. It's all we deserve right now, guys. We're nothing. We're a tiny little market. And quit behaving with the arrogance and the hubris that we've made it. We are nothing right now. And gold and silver are showing you that. People are not plowing all this money into Bitcoin. It's too small. It's too small, but it's okay. It's 17 years old, man.
Yeah.
Okay, there was a time, Natural Gas Clearinghouse, I couldn't do certain deals. I can't do a $400 million deal, dude. It's too big for us. It killed me, man.
Wow.
Okay, so what did I have to do? I had to go focus on $200 million deal. By the way, you know, I'm in college. I finished college.
See, that's like the main bulk of that clip I thought was interesting. But it kind of goes right along with what you were saying a second ago.
Yeah. I mean, I think we come from the same position, although I do think it's interesting that he says, you know, but Bitcoin's too small, but then he says, well, silver. I mean, Bitcoin had a bigger market cap than silver,
That's a good point. It did for a little bit. That's a good point.
It genuinely did. So like this idea that Bitcoin's too silver, you know, Bitcoin too small, silver's not. It's like, yeah. Don't know if I completely buy that. I agree. Well, I think first of all, he's right about we're not going to get a strategic Bitcoin reserve. At least it seems really unlikely, considering that if anyone was going to do it, it was probably going to be Trump, and he's not doing it. And I'll tell you what, if a Democrat gets in next, they're definitely not doing it. And
good point.
You know, maybe the next Republican, it depends on, you know, that's kind of interesting. It depends on what school of Republican comes in. You know, there's a lot of potential candidates coming up. JD Vance is a little bit more crypto adjacent than some of the other ones, like a Marco Rubio, say. I think JD Vance would be much more likely to pursue a Bitcoin reserve than.
It just doesn't seem like it's a priority. Like it doesn't. It's just like it's nowhere on their docket as a priority. Like unless Bitcoin was just running and just eclipsing every single level, it just blew. It didn't even care about, you know, retesting supports. It just kept going up, and then it was just shoved in everyone's face. Maybe they throw it in there just because everyone's telling them to. But you know, it's kind of like opposite. Like when the Bitcoin price retracts, everyone sort of just loses interest, even though that would be the time to get in. So it kind of shows who really cares, who's actually about the upset, and who's really just here for like the announcements and stuff, you know.
Sure, but also what's priority is so like ephemeral. It's really at a point in time, and it goes and comes. I mean, we all remember Doge. They were going to cut the deficit. That was like a 3-week period where they had religion about cutting the deficit. And then it was like, actually, no, we're not doing that. And then fast forward to now. And by the way, we want to increase US military spend from 1 to 1.5 trillion. And, you know, yeah, if we have like a couple of $1 trillion deficit, whatever, if it's 2.5, 3, whatever, it's all fuzzy money anyway. The point is that they don't have religion about Bitcoin now. We get that. But equally, there is like an economic cliff coming because of the fact that, you know, the dynamic where as much as the politicians want to pretend like you can just run a deficit and debt, run a high deficit and increase the debt forever. You know, there's the old, the famous saying, like I think it's like Simon's economic law, which is like something that cannot go on forever won't go on forever. And the idea that and you can't run a significant deficit like this forever. It will actually you have a debt crisis. Like that's just a law, as an economic law, because you have ever increasing interest rate payments as a proportion of your revenue. Like you know, eventually what will happen is the interest payments get more, you owe more in interest than the actual tax revenues you're bringing in. Like that's just math. That's just numbers. And so the point is that, and I'm not saying that's like going to happen, you know, next year or whatever, but at the same time, that is coming. And the funny thing is that go back and look at, there are Bitcoiners. It's really cool. Like one of the cool pieces of Twitter history, and I really hope that they get this right and they allow people to continue searching X. I think it's really important that we can look back at what people were posting many years ago. You know, sometimes the search database isn't very good, and I know I'm going off on a tangent here, but the point is that you can go back and find what Bitcoiners were saying in 2015, 2016, 2017. And there are prominent Bitcoiners talking about how, oh, US has just hit $18 trillion of debt, just hit $20 trillion of debt. Well, now it's at 40. Now it's at 40. And by the way, they don't want to, like, you know, maybe you want to say, well, you know, 40 is not the point where it all, like, okay, but it's not, like, I can tell you right now, it's not going, it's going up, and Bitcoin is this era term, and if it gets to 80, it looks like this is where it's going. Give it another 15 years, like just based on the growth rate of growth, and 80, by the way, is like maybe not 15 years away. It might be 7 years away, right? Like it's not. It's exponential. If we run into wars, if we run into unexpected expenses, it's going to have a steady rate of growth. If everything goes.
When we run into unexpected expenses, dude, it's going to happen.
Yeah.
Yeah. Like they can keep pushing that can down the road infinitely, it seems like.
Well, the point is that, like, you know, there would have to be something so I mean, look, you know, the hope and a prayer for the US government is like the AI comes along and suddenly GDP is growing at 10% a year, something stupid, because and I guess it's possible, right? If there's some kind of like Hail Mary prayer, you know, way to increase revenues so substantially, maybe you get out of this debt issue. But probably more likely what happens is that eventually you need to essentially you can't pay off your debt any other way than printing the money, which is fine, but you're going to print the money, and then that's going to result in a much higher Bitcoin price. And that's kind of it's a very basic thesis, but it's certainly proven correct in the long arc of Bitcoin. And there's nobody that has any real answer other than, you know, yeah, but quantum, that can really give any kind of reason why that wouldn't play out. And by the way, if it is quantum that happens, that is an issue for Bitcoin. All that means is that gold will be you know, if it doesn't work for Bitcoin, it will be gold. And maybe like housing as well. I mean, certainly housing has seen a lot of that asset price inflation over the last few decades, and that might continue. Stocks will rise. I mean, that's why we do these kind of like investment. That's why we're talking about investing and this sort of thing, because fundamentally, you know, by its nature, the nature of the economy is like it is actually very bullish. Is a sort of an underlying current, just on a dollar basis. It's all the nominal, you know, nominal number of digital of dollar units is going up, and so is the price for everything fundamentally.
Definitely. You know, I want to just to change gears a little bit. I know we want to talk a little bit about STRC, the MSTR ecosystem a little bit, some of these treasury plays in relation to Bitcoin. STRC's come up a lot in our spaces recently, and some of the people who come on and talk about it must be getting paid or something. Something's off about it. Maybe they just have a large position. I don't know. Something feels coordinated. There seems to be a lot of people talking about STRC. Now, there are also just like people who are, I mean, I have been interested in STRC. I think it's an interesting play. Something seems off with it, but it might just be my lack of understanding of it. The problem is every time I ask anyone, it turns into a 45-minute explanation, and it's just like, brother. But it's held very strong. It's had a couple of big drops, obviously. Nothing crazy, but like it's held pretty stable while Bitcoin and MSTR have bled. And it's
let's talk about it.
But
yeah, so let's talk about it. So on a basic level, the purpose of the product is it's meant to stay at $100 price. Like if it's working, if it's functioning properly, it should operate within a band around $100. He wants the idea is that it's a stable fixed price. And how does Michael Saylor and Strategy keep the price fixed? Well, what they do is they support the demand for the product by if the demand starts to dip for the product, so the price starts falling, he'll raise interest on the offering. So that what happens right now is you buy it and you're getting 11.5% interest payment. You get these coupon payments, monthly payments, I think they are, but you're getting coupon payments on it. It's a bond-like instrument. Mm-hmm. If demand starts to fade for this product, he will raise the rates, and next month's payment won't be 11.5%, it'll be 12% or 13% or whatever demand level whatever interest rate he needs to offer to keep demand high enough to sustain that $100 price. So that's how he creates the floor for the price. Now, for the ceiling of the price, if it goes above, like if the price starts going above $100, here's two ways he can handle that. One is he can lower the interest rate he offers, or alternatively, what he has been doing is he sells more bonds into the market, because there's an infinite amount of STR claims he can make theoretically. Well, we can get to that, but he can just print these, he can sell more, basically increase the supply of them. And so what he does is last week he sold $400 million worth of STRC onto the market. So the demand for the product obviously was exceeding that, sort of trying to push up above $100, and he's going to smash it down by selling STRC. But what he's doing there is it's essentially he's borrowing money. Michael Saylor and on behalf of MicroStrategy shareholders are borrowing money. What they're doing is they're selling the STRC, which is in effect taking money from someone, but now they've got a claim against the money. Now they have to pay an 11.5% interest per year. It's an expensive way to borrow money. I mean, you can get credit cards that out there that will lend you money at a cheaper rate than that. It's expensive. But what he's doing is he's borrowing money and then he's buying Bitcoin. Yeah. And the theory being that the Bitcoin will achieve a higher rate of return than the 11.5% cost of capital that he's offering on the STRC. He's also, when he's doing that, he's increasing the leverage inside the MicroStrategy business, because it's debt, right? He's got more debt. He's using debt to buy Bitcoin. How does he fund? How does he pay off that debt? Well, for starters, MicroStrategy as a business, they have essentially no cash flows. They do have a little bit. They have a software business, but they can't pay. Just last week alone, they added an extra, $400 million of STRC. That's about $45 million of liability cash payments they have to make in perpetuity, which is to say forever, like every year. They got that $400 million last week, but now they owe $45 million of cash every year forever, for the rest of time. Like for the next million years, they owe $45 million. That's what that means, right? And so, and by the way, he doesn't have a business that generates that cash. The only way he can generate that cash is selling MicroStrategy stock.
Cheers.
So it creates this interesting loop. It's a financial loop. He gets cash from the STRC, buys Bitcoin, increases the Bitcoin holdings of MicroStrategy. The equity now owns $750,000 worth of stock or something. The business owns all that Bitcoin. He doesn't want to ever touch the Bitcoin. He can't sell the Bitcoin because it's such a disastrous signal to the market. Cannot sell the Bitcoin. But he owes cash on the debt now. Now he owes. So what does he do? He can sell stock. He can sell shares in the equity to make payments on the debt. Yeah. It's a high wire act, right? It's this financial engineering. It has worked for him in the past. I mean,
that's exactly what I was going to say. It's worked before is the thing. I just think it's like, dude, there's no way to explain it without taking 5, 6, 7, 8, 10 minutes even. Like it's because it's got so many of these caveats. And by the way, if you're not a fan of Saylor, dude, they don't want to hear it. Like if you're not a fan of Saylor and his strategy, people are like, brother, this is as Ponzi as it gets.
It is. Look, it is. There's no question. It's very Ponzi-like. I will say it's not a full Ponzi, because the Bitcoin is there, and theoretically that should at least, like, it's not, the point is that Saylor is saying there will always be demand for my equity. I can sell equity as long as I need to because I've got the Bitcoin.
Yeah.
And other people like, of course, if you don't believe in Bitcoin, then it's it's if you don't believe in Bitcoin, then it's a pure play Ponzi.
Yeah.
If you do believe in Bitcoin, then you go, oh no, that value is locked there. That's permanent capital. He's got $50 billion worth of Bitcoin, and it's going way higher in the future. He's going to have a full on demand for his product forever. But there's of course this in between period where you go, hey, maybe the Bitcoin is good, but you're paying a lot, like you're borrowing a lot, you're just borrowing money.
People are worried that if everything hinges on Bitcoin outperforming very strongly forever, basically. And people have talked about this whole, Bitcoin's been positive for 2 decades straight. We've never seen an asset just go three decades in a row, just green, continuing to just blow past everyone. And people are like, well, they've never had an asset, that's like Bitcoin, which is true, except for now there's a derivatives market and there's ETFs involved. And there's all sorts of ways that people can gamify the asset now. So it's this whole thing. And then people are like, well, what happens if, the stock market starts to go the opposite direction? Bitcoin's just going to track alongside that. What if we see a commodities driven bull market for the next 5-10 years? Then Bitcoin's stuck and Saylor's stuck in his position, paying off millions and millions of dollars of debt because he took out a position on Bitcoin, and now we're flat. And that's what people worry.
It will be ruinous if Bitcoin is the same price today in 10 years time. MicroStrategy will be in tatters. There's no question about that. This strategy relies on Bitcoin price going up fundamentally, and it's I guess it's interesting because it does offer this leverage vehicle for people to invest in if you're extremely bullish. Of course, it begs the question. I think one of the things that we want to talk about here, and I brought this up with you as well, in terms of like a product we wanted to highlight for the show because it's analogous, but it's different, is the convertible bonds that MicroStrategy was offering 5 years ago. They used to be 5 years ago, their strategy was borrow money at a very low interest rate and offer the potential upside. So, the people that were lending money to strategy, it could convert into equity in the future if it went up. But equally, strategy were not paying 11% interest on the debt. They were paying 1% interest or a much smaller amount. Maybe bring up the product and we talk about it more.
Totally. Yeah, we've been that. By the way, big shout out to Rex Shares for sponsoring the show. This is one of their ETFs, but it's a pretty interesting one here. But yeah, please.
Yeah, so this vehicle, this BMAX vehicle, what they do is they hold the Bitcoin Treasury convertible bonds, and these are a lot of these historical. They're not all. They're not. It's not entirely this, but a lot of the vehicle is holding these historical MicroStrategy convertible bonds. These are ones issued 2024, 2023, 2022, etc. And the point is that what's interesting about these bonds is that they have the upside MicroStrategy's convertible equity, which is to say, if MicroStrategy does extremely well, they tend to go, they will capture that upside. Like in a world where Bitcoin is up 100%, these, historically speaking, these bonds have done kind of similar type of performance. Maybe they don't go up 100%, maybe they go up 80% or whatever, but they have that kind of upside. And equally, they don't get as smashed on the downside because they're higher up in the capital stack. They are debt. Fundamentally, MicroStrategy has to pay back this debt that they borrowed. So it has this kind of asymmetric, you get the upside potential, not as much downside potential, but you don't get like a big interest rate, right? Yeah. In finance, you can't get everything. You can't get without the downside, with the upside and a big fat coupon along the way. Nobody's going to offer that. You have to pick what you want. So this gets you some upside, less downside, but you're not getting the interest rate. Whereas now, strategies offered a completely different product in this STRC, and I think what a lot of people are confusing is they're sort of going, you know, this is like last cycle where they had these debt instruments and everything worked out great and yada, yada, yada. But I think it's worth pointing out the debt that strategy hold is fundamentally different today than what it was 5 years ago. 5 years ago, it was this stuff, and this stuff was working. But today, it's something completely different, and it's not clear it's going to work in the same way. And so maybe you take it from there, but that's the point to highlight.
No, I think it's very good points. And you know, for people who are out there who are trading these things, definitely this is one to add to your watch list. There's a whole lot of options out there. Like there's some. I remember when MSTR was at its peak, and people were like, considering selling their homes to get in just before MSTR, went to $1,000 kind of thing. And then we start to see some reversal. We start to see more and more of these different financial instruments, I guess you could call them, that say they're starting to put out. We're starting to see other people maybe interested. I could definitely see. I don't know what it would be. I could see even Tom Lee getting into this type of game. Trying to figure out ways with BMNR being like the king on the hill, and then figure out ways to sort of work with the Ethereum that he's been able to hold. Now, Ethereum is an interesting one because it's got the staking feature, but he's forced to also sell to even get any of those benefits. So he's in a weird flywheel as well. So that's the only reason I think it's possible he jumps in here. But I think you're going to continue to see all sorts of these kinds of things, the convertible bond ETFs, the treasuries. Those are definitely not going to stop. I mean, there's one in the Hype ecosystem for the Hyperion is out there stacking Hype because that crypto ecosystem is doing very well, and so I think this trend will probably continue on. And by the way, if you guys are interested, and you guys are watching on YouTube or X, in the description on YouTube and the tweet below the stream on X, if you want to find out more about this one, just hit that link down there to go to RexShares page for this. I do want to say, if you're an investor, definitely carefully consider a fund's investment objective, risks, charges, and expenses before you do any kind of investing. The fund's prospectus and summary prospectus contains this and other info about RexShares. And if you want to obtain their prospectus and summary prospectus, just visit that site. Like I said, rexshares.com. Link is down below. Their prospectus and summary prospectus should definitely be read very carefully before you invest. Again, big shout out to RexShares for sponsoring today, one of our longest running clients. But yeah, I think that's a very good point there. And it's interesting like how much STRC has become a hot topic of conversation with Bitcoin starting to go down, and people are trying to figure out ways they can still be involved, get some type of exposure to that world, and get dividends. I think with Bitcoin entering the Wall Street world, the dividends, how do I put this? Like the longer an asset doesn't go up and starts to trend, sideways / up a little bit or even down, the more people start to look at distribution and being like, hey, how can I get paid? I'm just holding this damn thing. Like, it's not going up. What am I supposed to do with this thing? Like, and there's been so many instruments in Wall Street that are created. There's all sorts of stocks out there, single stocks. There's tons of ETFs that pay you out quarterly dividends, monthly dividends even. And so that's why I think like the trend will probably continue in the crypto markets. Like all we've seen for the crypto side, once Wall Street stepped in, is we just found out that the stock market has just been doing the same exact things crypto does and calling us ridiculous and absurd and degenerate. And we look at Wall Street and they just have fancy words and black ties behind it and nice shoes. They're doing all the same kinds of things,
Well, what's interesting is that I think one of them, like GameStop, people don't really talk about this, but they're essentially running like a micro strategy, except that they just put the money in like term deposits. So it's a very odd thing, because if you look at GameStop, they had this huge hype for all these reasons, historical reasons going back over the last 5 years, these different hype cycles. And every time that happened, the CEO sold tons of equity and was able to. So see if you can pull up the market cap of it, because what's interesting about I'll
pull it somewhere else.
I think it's next to that price chart. You should be able to click on market cap.
Oh no, you're right.
But what's interesting about it is that it's $11 billion market cap, right? They have like $10 billion in cash. In other words, it's this silly thing where it's like identical to MicroStrategy in the sense of the kind of enterprise value of the business is like, pretty much zero, but they have a just a metric ton of cash that they're holding, and they're just sitting it, putting it in like bank accounts. It's like it's literally, it's like running the Sailor strategy, except we're just going to put it in a term deposit. It's actually hilarious.
Well, I mean, Sailor started to, like, he posted the green dot. He's done it like once or twice where he's started to stack cash, and I think and that may have been just a timing thing. He was like, dude, we're getting to the point where Bitcoin's been down for 5 months straight. I gotta switch it up a little bit so people don't think I'm a complete idiot, which is so strange because, like, you know, when Bitcoin's going up, everyone's like, God, what a genius. And then when Bitcoin's at prices you'd want to be buying and he's still buying, they're like, what an idiot. Why is this guy buying Bitcoin? You're like, what? Like, I don't think we can win in this scenario because it's backwards, you know? So, like, I don't know, dude. It's a weird world out there, and you get people invested and they full port these things. You get very intense perspectives on everything going on, and you never really know who knows what they're talking about. Like, dude, there was a period where GameStop was, it was probably 6 months ago. I'm trying to think. Maybe more like a year ago. It was whenever they were talking about buying Bitcoin. I remember, like, Bitcoin Therapist and a couple of these big Bitcoin guys, when GameStop was first announcing they're going to enter the game for Bitcoin, they're talking about stacking, building a treasury, and people were freaking turning like 10% of their whole portfolio and putting it into GameStop. I'm like, brother, we are cooked. Yeah. We've got to do a better job of figuring out where in the market we are. That's the only reason we started doing trading spaces, because I was like, at least these guys are keeping track of the levels every week. So if you're like, oh, I'm about to full port this, you're like, hold on, let's zoom out in the higher time frame. Let's double check that we're not, you know, like way overbought here. Maybe there's a better chance you buy in 5 months if you still like it. But when markets are up, dude, it's very hard to think rationally. You know, you're so worried that you're going to miss it. But,
well, the funny thing is that all these, like, you know, you mentioned BTC Therapist or whatever, but he's looking for like a degen play.
Yeah, I know.
And yet, ironically, GameStop is like the most boring stock in the world because it's literally it's basically like putting your money in cash in the sense of because they didn't end up buying the Bitcoin, and so it's like literally, what do you own? You own a company with no, you know, very little operating cash flow, but a lot of cash sitting in a bank account. So it's actually like I think it's deeply ironic that it went from being this like absolute. It's like this meme stock thing worth, you know, like that could go up a ton, could go down a ton, to being actually like incredibly boring. It's just this shell. It's just this shell that's got money in bank accounts. It's like, which I think is hilarious. It's like
that's what we started. That's why our spaces, so many have turned to TA focus, because it's like, what else are you going to do other than monitor the price? If you're here, if you're still here every single day, like, there's not that much else to do. You can fall for every narrative left and right and just continuously get rinsed left and right. Or you can kind of just keep top of mind where we are in the markets. If we continuously put in lower lows, it's like, okay, well, like, you know, until something changes, we're in a bearish trend here. Versus, you know, if you don't even realize where we are in the market and you see, oh my God, you know, I don't know, X company's buying Bitcoin, you're like, oh my God, I better not miss this. But then you look at the Bitcoin chart and you're like, okay, I'm completely fine. I don't actually need to fall for this announcement. And that's where it's been helpful. You know, the TA thing, like, I'm not necessarily trading every single day and making scalping positions every other week kind of thing. But it has been helpful, you know, to keep my head on straight, because there are announcements going left and right. They're a bear market as well as a bull market. But in the bull market, like, it's an entirely different thing, because the vibes are so intense that it truly feels like this is the super cycle every time. Because it could be there will be at some point some kind of ridiculous move, probably. But again,
21 was like that. In 21, it was like, I mean, 2021, it was like, oh my God, Bitcoin's gone up, and then it just goes up and it just goes up and just got like, and it.
But,
you know,
but by the time everyone figured it out, you know, most people were finding out around a 50K Bitcoin, and then we get to like 60, 70, and it starts to slow down. You know, but like everyone was getting really excited around the 50K, where at that point you've lost most of your opportunity. At that point, you're hoping for a 20% win. If you got in at 10, 15, yeah, you're cooking. You're up 5-6x. But that was a totally different market. You know, like if you're stacking at that point, it probably wasn't that fun. You weren't feeling like the FOMO yet. It's only when you see the chart just boom, boom, boom. You're like, oh my God, this is it. I got to get it now. Full port my paycheck. So I don't know, dude. It feels like it's been forever since we've had those green day. I mean, it has been 5-6 months of sideways / down for Bitcoin. So I'm very curious to see what happens here. Obviously, we have Trump. We have this Iran situation a few days ago. He's like, yeah, it's going to be over soon. And then the Strait, like you mentioned, the Strait of Hormuz thing pops up. And now people are just throwing around the word nuclear bomb like every other day. And like no one knows what's going on. One day Israel is the big villain. Next thing you know, it's Islam. Or just like, you know, you never really know what's going on anymore in these markets. And half the videos that are being posted aren't even real. They're AI generated. I'm just like, so I don't know what to make of these markets. In my head, like I think it was in our stream, Druckenmiller or maybe someone like him was just like, look, you got to just be invested, period. There's not much else I can tell you in terms of an edge. Yeah, you should have some AI exposure. Yeah, you should have some tech exposure. Yeah, you should have some boring stocks exposure, some QQQ. Yes, you should probably have Bitcoin. Like you should probably just have all of it. And yeah, you should have cash with the intent to invest. Otherwise, you're holding a dead asset. You know, it's dead on arrival technically, but we found that the government can also just kick the can down the road. So there's not like a whole lot. Like I don't know what the alpha is anymore because like there's always a bull market somewhere. But unless you're really dialed in, yeah, dude, you're gonna miss every single move because you're gonna hear about it once the move already happened. So I'm not sure what advice we can give to people out there.
Well, I mean, I think that what you did say there was good, which is if you don't have a great a great idea, a diversified portfolio is the way to go. I mean, and it's generally speaking, like think about how well the stock market has done in this kind of shaky period over the last 6 months, and yet actually stocks are like more or less at all-time high. Like it's incredible strength actually in the face of, you know, when you compare it to say Bitcoin getting its, you know, face just smashed in down 40, 50%, and stocks are at all-time high. Like that's impressive, but that's the power of having this kind of diversified exposure where, you know, you've got your winners in there. Like you're always going to have the AI, or when it's not AI's turn, you'll have other company. You know, maybe this, you know, to Tom Lee's point, you know, there's been the shakiness of the market, but you know, when oil goes up, there are certainly going to be some winners out of that, right? And if you've got the index, you're going to own those winners too. So that is the kind of the point of diversified exposure. Obviously, if you've got an amazing idea, that's the time to get more concentrated. But equally, nobody has a constant stream of incredible ideas. You have to pick your moments.
Yeah, 100%, 100%. You know, any last things you're paying attention to these markets? Any last charts we should pull up or have a look at before we sign off?
No, man. I think we covered it all this week. But you know, obviously, like the stuff to watch going into the next week is just whether things clear up in Iran, or if we're looking for a more prolonged war, because I think that's going to be the most important story in the short term.
Yeah, more than likely. Look, guys, a bunch of things to pay attention to. Hopefully you learned something in this stream. Again, if you want to find out about those that Rex Jersey ETF as well, again, that link is down below on the stream. If you're on YouTube, in the description, on X in the link, the tweet below this, the stream link. Look, if you're interested in the Bitcoin stuff, the Bitcoin ETF flows, things like that, definitely be sure to give Thomas a follow. If you enjoy these types of discussions, be sure to follow along here at Wolf as well. We try and put out content each and every day, do spaces and streams all the time. Other than that, man, look, try and keep a lid on it. Try what do what you can to touch grass, you know, when you can, and see if you can stay invested in these markets. Keep your head on straight. Hopefully enjoy these streams. If you do, definitely take a second and repost it or quote tweet it, tag a friend. And if you're on YouTube, definitely hit the subscribe button. We'll see you guys all in the next stream. We'll be back on next week at 7:30 p.m. Eastern EDT, whatever EDT is. Now that daylight savings time happened, it totally screwed us up this week.
Follow us on X, you'll find it.
Yeah, follow us on X, and we'll see you guys on the next one. Take care, everybody.